What's up everybody, Gen X Dividend Investor here. In this often requested video, I'm going to show you how my dividend portfolio is doing as of today, which is June 10th. But first I wanted to do a shout out to all my long-term Patreon kings, my Patreon aristocrats, my Patreon champions, and my channel members. Thanks folks, I really appreciate all your support. Now if you're new to my channel and you want to know about my background and how I built my dividend portfolio from scratch over the last 3 decades, then feel free to watch my older videos, as I don't want to regurgitate all the same info in these portfolio updates that I do. So I'll quickly jump into Fidelity next, and I recommend you stay until the end because I'm going to tell you about a scary health issue that just happened to me this week, and it's a reminder that if you're feeling envious of my portfolio, then just realize that I'd probably trade my portfolio for your health. And then after seeing my stuff in Fidelity, I'll show you my tickers in my spreadsheet tool, which is a helpful way to see my income trends and sector weighting and stuff like that. Okay, I've blocked out some things I don't want to share, like account numbers and non-investing accounts. What you can see is that on June 10th, when I recorded this after market close, my 3 investments accounts add up to $2.99 million US, which is made up of $1.327 million in my IRA, $1.48 million in my taxable, and $182,000 in my wife's retirement account that I manage. Lately, my accounts have been underperforming the market, which is what I'd expect and I'm okay with because I tend to overperform when markets sink, so it's a conservative portfolio, and since I'm in retirement now, I focus a bit more on capital preservation and income than I do trying to make it grow. Of course, if I was younger, then I'd focus on quality stuff that could grow more. And here are the last 30 days of activities in my accounts. So you can see that today in my taxable, I got a $761 cash dividend from Chevron, a $729 dividend from ExxonMobil, and then a $326 amount that represents an automatic transfer of settled dividend cash from Southern Company in my taxable account into my bank checking account. We also see that on June 10th that I got $58 of Chevron in my IRA and $415 of ExxonMobil in my IRA. I'm withdrawing my IRA dividends early, which means I paid the 10% penalty to do so. Of course, if you're not retired, then I'd strongly recommend against taking anything out of your retirement accounts. And note, I'm still reinvesting some of my IRA divvies, which I'll talk about shortly, and at some point I may do a 72T, which lets me withdraw out of my IRA early without penalty, but 72Ts have some downsides to them, so I'm not doing it quite yet. Going further down, we see a $479 dividend from Southern Company in my IRA, and some other stuff including a $1,186 dividend from JEPQ, which I then use $200 of it to buy more of itself. Beyond that, I'm also buying $200 of Realty Income from its dividend each month, and $100 of DIVO from itself, and $400 of SCHD each time it pays out quarterly. I currently average a little over $10,000 a month in dividends, most of which are taxed favorably, like my EPD distribution, which is $0 in taxes for the next 6 or 7 years, and I mostly get qualified dividends in my taxable account, which are also favorably taxed, and then I get some divvies from my retirement accounts, which count as wage income along with the 10% penalty. So overall, I still average a lower tax rate than if that $126K came from a job, which is pretty insane to think about. I mean, I literally can do nothing, and it's like getting paid a 6-figure salary each year, and because of that I was able to retire while I was still in my 40s almost 4 years ago. Okay, let's take a quick look at my IRA. I'll just pop up this screenshot so you can see it, but I'll go over the specifics in my spreadsheet tool, as that's an easier way to understand all my accounts together. On the bottom we can see that in total my IRA has $1.327 million US of dividend stocks in it, and Fidelity estimates that this account yields $57,405 each year in dividends. You might also notice that some of my positions have whole shares and some have fractional shares, and that's because when I transferred my account from E-Trade to Fidelity a few years ago, I transferred them as whole shares, so any fractional ones you see now means I bought some additional shares since I moved. On average, I completely sell out of and buy 1 new ticker each year, so like 3 years from now I wouldn't be surprised if I have 3 new tickers and have moved out of some as well. That's just my average, even though my guideline is to try not to move out of any positions, but sometimes I'll do it based on my needs and risk tolerances. Like I moved out of 3M a while ago because the risk from lawsuits felt too big for my liking, and while I know that lawsuits are a common occurrence for most businesses, sometimes they can get big enough, or I think they'll get big enough, that I might decide that I need to move on. My hope is that 3M gets through them all, and I could see myself getting back into it at some point in the future if things clear up. Okay, moving on, we come to my taxable account. Here we see it's at $1.48 million, and Fidelity estimates that it generates $61,416 of divvies a year. Fidelity's estimates are sometimes a bit different than my spreadsheet's estimates because I dynamically adjust numbers based on real-time currency changes that happen, along with some minor other nuances between our calculations. And then last of all, we come to my other retirement account that I share with my wife, and it's at $182,000, and it yields $7,663 a year. So overall, Fidelity estimates my annual dividend income to be at $126,485 a year, which is about $200 less than my spreadsheet estimates. And here's a new graph I recently added to my spreadsheet, which shows my dividend income trend since I created my latest incarnation of my spreadsheet. The spike in the middle represents a spin-off that one of my tickers did that I sold out of, and you can see that this month in June is looking shorter because we're only about a third of the way through the month. Okay, let's quickly go over my 28 tickers in my spreadsheet, sorted from my largest position to the smallest. For reference, the ticker column and the pay date and the divs per pay period columns are color-coded to tell me when dividends are being paid out. So yellow means within the next month, like SCHD is. Light blue means it's paying out within a week, like O is. Green means it's paying out today, which Exxon was on the day I took the screenshot. And white means it's paying out more than a month out, so like AbbVie and J&J and such. The middle columns are red or green daily price movements, and then on the right side we see that my dividend yield column highlights in green when yield is over 4%. Okay, so I have 2,663 shares of SCHD, which is 6.93% of my portfolio, and it went down 0.15% on the day I took this screenshot, leaving me with 207 grand worth of it, and its next pay date is on July 1st, and I'll get paid around $1,779 on that day. And I say around because it's an ETF, which means its payouts tend to fluctuate, and per year SCHD pays me a little over 7 grand, and right now its yield is about 3.55%. SCHD is falling a bit out of favor with some investors as interest rates are high and dividend yield isn't as compelling, though the best time to invest in a quality asset is when others aren't as interested in it, so I've been dripping some into it. I think some people have unrealistic expectations for SCHD, but if you dig into how it works, then I think you'll be mentally prepared for times like this. My next biggest position is Realty Income at 189 grand worth, which pays me $941 a month or $11,297 a year, and I have a medium-term goal to get that up to $1,000 a month. And shortly after I filmed this section of the video, I saw that Realty Income did another slight dividend hike, so my income is actually a tad higher now. O is also falling out of favor as the interest rates rattle people, but my risk tolerance is such that I'm buying more as I think it will make it through these tough times, though obviously I could be wrong. Next up I have Altria at 176 grand worth of it, which yields about $14,900 a year. Then 160 grand of Microsoft, which I hold to enable some capital appreciation in my portfolio, even though its yield is so low, generating only about $1,100 a year. It's pretty rare for most retired dividend investors to hold something like Microsoft, as they understandably often want more dividend income coming in from each of their positions. Then I have AbbVie at 159 grand, yielding about $5,800 a year, and then JEPQ at 144 grand, which has performed much better than I anticipated in such a short time. JEPQ writes out of the money Nasdaq 100 index call options in order to generate more distributable monthly income, and for me it's been yielding around $1,000 a month. Nvidia makes up 7% of JEPQ these days, so it's cool to indirectly own that monster of a stock. But it has risks you should be aware of. Then I have J&J at 142 grand and yielding about $4,800 a year. Then my MLP and EPD at 136 grand worth, yielding $9,800 a year. Then ExxonMobil at 136 grand, yielding about $4,600 of dividends a year. I'll move through these a bit faster, but you can always pause the screenshot if you want more specifics. So on my next page of dividend stocks, we see that I have DIVO at 134 grand, which is an ETF of high quality dividend stocks which makes extra income via covered calls. Then I've got Procter Gamble at 129-ish grand, then Pepsi at 127 grand, Duke at 110 grand, Coca-Cola at 106, McDonald's at 104, BTI at 86 grand, which is one of my two non-US stocks, and then Goldman Sachs at 80 grand. And then on my final page of tickers, I have Chevron at 79 grand and Apple at 79 grand. And in fact, on the day after I worked on this section of the video, Apple spiked up a crazy 7% due to the AI integration announcements, and I gotta say that I plan to get the iPhone 16 because of it. After Apple, I have Kimberly Clarke at 75 grand, Philip Morris at 69 grand, Caterpillar at 68 grand, Colgate-Palmolive at 62 grand, and Toronto Dominion at 45 grand. And it's my other non-US stock, and I hold it in my retirement account so that I don't have to deal with Canadian withholding taxes. And let's talk about TD for a moment. So recently it came out that they allegedly did money laundering, and there were allegations of some other improprieties that were going on. I'm guessing TD will make it through these issues, though another challenge for them could be if we enter into a big recession. And if that happens, and if companies and people struggle to pay back their loans, then how will TD perform? The reality is that no one knows, and all investments have challenges, so you gotta figure out what your confidences and risk tolerances and timelines are, and then invest accordingly. I have a reasonably small position in TD, and I think they'll come out on the other side, so I continue to hold. But putting all that aside, let's take a look at their Fastgraphs to see if it implies that it might be cheaply priced. And note, I'm a Fastgraphs affiliate because I value their product so much. Here on their forecasting calculator, we can see that it estimates TD's future growth rate at a mediocre 6.38%. Let's look at its historical graph, which gives us insights into pricing. Now, you never want to blindly buy or sell just from looking at one Fastgraphs, but I find it super helpful to see that TD's black line stock price is well under both its potential intrinsic value line in orange, as well as under its blue line, which represents how the market has valued TD over time. Now, could TD fall more? Of course. More news could come out that could slam it, the world could go into a major recession, Canadian pigeons could develop a case of the new evil pigeon flu, and blah blah blah. Anyway, we also see that TD has a decent AA- credit rating. AA rated means investment grade high credit quality with a low default risk, and the minus means it's a tad under that. The white line is a visual dividend payout ratio, so how close it is to the orange line represents the payout percentage, and you can also hover over any point on it or anywhere on the graph to get more insights into things. Like in this case, I hovered over part of the white line, and the pop-up says that on 10/31 of 2023, the dividend payout ratio was at 48%, amongst other info. The light green shaded area above the orange line represents dividends paid out of earnings, so lots of very helpful and easy to consume info that you can quickly glean at a glance. Okay, now let's compare TD to Goldman Sachs, another financial company I own. Fastgraphs estimates an amazing 19% growth rate for GS. Nice. Here we see Goldman's credit rating is still investment grade at BBB+, which is slightly under TD's AA-. BBB means medium investment grade credit quality with a moderate default risk. But now look at Goldman's black price line relative to its fair value orange line and relative to its historic blue line trend of how the market has valued it. What we see is that Goldman Sachs appears to be a tad expensive, whereas TD looked cheap. And graphs like this is why I plan to maintain my subscription with Fastgraphs for as long as I invest. I used to calculate fair values manually, and even made calculators to automate some of that work for me, but Fastgraphs has taken the place of me doing that, and it does a ton more. I strongly recommend giving Fastgraphs a go, and it's something that I've told all my investing friends and relatives that they should try out. If you do decide to sign up, then consider using the Fastgraphs coupon code and my affiliate link in the description of this video, as new signups can get a 25% discount on their first Fastgraphs payment, which works even if you sign up for a full year. Anyway, let's continue on with my portfolio review. Next up, I have 33 grand of Home Depot, then 33K of Travelers Insurance, and finally 25 grand of Starbucks. So in total, I have 37,653 shares of stock worth about $2.99 million US, and which generate about $126,700 in dividends a year. My portfolio's average weighted starting yield is 4.2%, and my portfolio's average weighted 3-year dividend CAGR is 5.6%. Before I was retired, my starting yield was lower and my dividend CAGR was higher. Okay, and this is what my portfolio looks like broken down by sectors. So like consumer staples is 16.8% of my portfolio, technology is 12.8%, ETFs are 11.4%, since stocks are 11.1%, etc. And this shows my dividend income broken down by sector. So 21% of my income comes from SIN stocks, 11.5% from consumer staples, 11.4% from tech, 10.5% from ETFs, etc. And here's my dividend income percentage by ticker. So MO brings in 11.8%, JEPQ 10.1%, O 8.9%, EPD 7.8%, SCHD 5.6% of my income, etc. And here's a 10-year estimate of how my dividend income could grow, assuming my historical dividend growth rates continue. The blue bars are the no-drip ones, i.e. that means I'm not reinvesting my dividends, and the red bars show how my dividend income could grow if I was reinvesting all my divvies. My guess is that I'll end somewhere between those two estimates since I'm reinvesting a small portion of my divvies, but it's also probable that my hikes may slow down a bit. And then here are the actual numbers for the previous graphs. So like in 5 years from now, my dividend income would probably be somewhere between $166K a year and $202K a year. We can see that on average I make about $10,500 in dividends a month right now, which is $2,435 a week, or $347 a day, or $14.46 an hour, every hour year-round. And as long as my companies continue to perform, then I expect that kind of income will continue to come in. If we look further out in time, then we can see how my dividend income numbers can get really big. Like 30 years from now, I could be pulling in somewhere between $650K a year to $1.6 million a year. And yes, inflation would eat up some of that, but if I'm still alive in 30 years, then I imagine that even with some dividend cuts, it'll still be a ton of income, and I'm happy knowing that my kids should have much more financial security than I ever did. Okay, and this is a breakdown of my dividend income I've received over the last 6 months, along with the income I should receive in the next 6 months. It's pretty cool to see these numbers. I've been slowly dripping $200 a month into O, and that along with their multiple hikes they tend to do over time is reflected in these numbers. Like in December I got $912 of O, then in January I got $915, then $916 in Feb, $917 in March, $919 in April, $920 in May, then $941 this month, etc. Most of my tickers I'm not reinvesting into, so they only go up if they do a hike or if it's an ETF which has more volatility. And in fact, right after I was working on this section of the video, I got an update that Realty Income did another small dividend hike, and then Caterpillar did an 8% increase, so neither of those are reflected in this screenshot. Basically, my O income went up another $2 a month, and my Caterpillar income went up $22 a quarter, and each little bit continues the growth and compounding. On the bottom of this chart are the total monthly dividends I received or should receive in the future. So I got around 12K in December, 9.3K in January, 9.9K in February, 10.9K in April, 10.2K in May, 10.6K this month, etc. I still really find it amazing how some companies have been paying out and increasing their dividends for decades. Okay, and here's a view of my actual dividend income going back in time for the first half of my tickers. The current month is June, and then each column to the right is the month further back in history. The amounts listed in the current month are either the amount I got, so like $819 for Chevron, or they say that I've gotten zero out of what I should get. Like for Duke, it says that this month I've gotten $0 of the $1,103 that Duke should pay out later this month. And here is my historical income for my second half of tickers. I love seeing my dividend income trend up over time, but remember that it really only does that if there's a solid company behind the ticker that is growing. Thus, be careful if you're sacrificing quality just to get more divvies, because odds are your sacrifice will come back and bite you in the future. Okay, now I'm going to switch gears and tell you about a health issue which hit me this week on the morning of June 10th, which was that I had another one of my amnesiac episodes that lasted for about 4 hours, which is a health issue I recurringly get that some of my longtime subscribers know about. Basically, these memory issues started about 2 decades ago after I had a big surgery, and I've unfortunately had dozens of them over the years. When they happen, they usually last for a few hours, and I forget a lot of what happens during them, though I do know who I am and where I am, but beyond that I don't remember much. Like I'd struggle to even be able to articulate all the stocks I own. In fact, this time my son told me later that I walked into his room over 10 times in the span of 20 minutes to ask if he was ready to get on the school bus, and I don't remember doing that even once. Sometimes these amnesiac episodes happen monthly, and sometimes it can take a year before I have another one. I tell you all that not for pity's sake, but instead because I want you to realize that far more important than having a good dividend portfolio is having your health, so be grateful for what you have. And yes, I've talked to specialists all around the world and done dozens of tests, but all to no avail. We've tried a variety of diets and medications, and I've been hooked up to a bunch of different devices to try to figure things out, but so far no one knows what's going on with me. But the upside is that it's truly helped me appreciate the life I still have in a way I never did before the issues started happening. And with that, I'd like to close things off and remind you of my Fastgraphs coupon code and affiliate link. And I'll also recommend that you check out my Seeking Alpha affiliate link, as new users often get discounts for signing up. Finally, take a look at my Patreon seats to see if there's any you want to sign up for, but since my Patreon Aristocrat and King seats are usually sold out, I'll also recommend that you check out my channel membership, which gives you a variety of perks, including a badge icon that is placed by your comments on my videos and which levels up over time as long as you're a member, and you get the ability to vote on which thumbnails I use for my next video, and you get to watch my videos about a day before I release them publicly. Whatever you do, please hit that thumbs up button, subscribe if you haven't yet, and click that bell notification. And don't forget to join my free Dividend Discord chat server, which has over 11,000 dividend investors on it from 81 countries around the world. Thanks for watching, stay positive, and I'll talk to you again real soon. Remember, I'm not a financial advisor, and my videos are for entertainment and inspirational purposes only. Investing of any kind involves risk. I'm only sharing my opinions with no guarantee of gains or losses on investments.